Walgreens is set to close a significant number of its approximately 8,600 locations across the United States as the company looks to reset the drug chain's struggling business. The company did not announce a specific number of store closings, but said Thursday that it plans significant closures of underperforming stores across America as part of a multi-year improvement program. CEO Tim Wentworth said on a call with analysts Thursday that changes are imminent for roughly 25% of unprofitable stores and that Walgreens' strategic review will include closing a significant portion of these underperforming stores. We have reached a point where the current pharmacy model is becoming unsustainable and the challenges in our operating environment require us to approach the market differently, he said. In an interview with the Wall Street Journal on Thursday, Wentworth said the closures would focus on locations that are unprofitable, too close to each other, or stores suffering from theft. Walgreens revealed few additional details about the closures on the call, but said they will take place over the next 3 years. The company also said it would consider additional closures if performance does not improve. Wentworth said the vast majority of staff working at the affected stores would be offered jobs elsewhere. Stocks fall due to weak expectations. Walgreens, WBA, shares fell 20% to their lowest level in decades. The company also said in its earnings statement that it lowered its full-year earnings forecast. We continue to face a challenging operating environment, including continued pressures on the U.S. consumer and the impact of recent market dynamics that have eroded pharmacy margins, Wentworth said in a press release. Our results and forecasts reflect these headwinds. Inflation has greatly impacted the pharmaceutical business, both on the front end and back end of pharmacies. Shoppers are becoming increasingly selective and price-sensitive in their choices, Wentworth said on the call, adding that he expects the operating environment to remain difficult in the U.S. and does not anticipate improvement. Sales rose 2.6% to $36.4 billion during the quarter. This may not sound unreasonable, but this is below the rate of inflation and, across some business sectors, represents a loss in market share, Neil Saunders, managing director of Global Data, said in a note. Of particular concern for Walgreens was a 4% decline in retail sales during the quarter. But that's not surprising because its struggles in stores have been exacerbated by a cost-of-living crisis that has led customers to cut back on the products they buy and look more for the best deals, Saunders added. Walgreens cut prices on more than 1,000 products in May, following its competitors in an attempt to attract inflation-weary shoppers turned off by high prices. But the company said Thursday that this would hurt its profitability. The struggle for pharmacies. Major pharmacy chains, including CVS, and Rite Aid, have struggled in recent years due to declining profits from filling prescriptions. They have declined due to lower reimbursement rates for prescription drugs and new competition from Amazon. The front end of drugstores, where they sell snacks and staples, is also facing pressure from larger competitors, including Target and dollar stores. Wentworth said on the call that Walgreens' store assortment will change and that it has eliminated 8 national brands and instead started selling similar merchandise produced by its house brands or preferred partners. He did not specify which brands were removed, but said they fell under the health and wellness categories. 19. The number of consumers visiting pharmacies to shop is becoming less. Prescription volumes are also falling because people are getting fewer elective procedures. GLP-1 drugs, which include Ozempic and Mounjaro to treat weight loss and diabetes, have not been a boon for the chain. She loses money filling these prescriptions, Wentworth told the Wall Street Journal. Changing the business model didn't help either. Walgreens will no longer retain a majority stake in VillageMD, a primary care network in which the company previously planned to open full-service physician offices in hundreds of its stores. Walgreens said the value of its failed merger with VillageMD had declined so much that it had to take a huge loss of $6 billion on its balance sheet. Over the past few years, CVS has closed about 900 locations, and Rite Aid, which filed for bankruptcy in October, has closed more than 100.